Hey crypto nerds, if you've been watching Ethereum lately, you know it's been a wild ride. Just a couple weeks ago, ETH took a nosedive, dropping 3 to 9% from highs around $4,700. But as of August 16th, 2025, it's bouncing back strong at about $4,440. Today we're diving deep. Why did ETH fall? When's it hitting 5K? What's the peak for this bull cycle? Plus social sentiment, big players' moves, and what you should do as an investor. If you're holding ETH or thinking about buying the dip, smash that like button and subscribe for more crypto breakdowns. Let's jump in. First off, let's talk about that dip in early August. ETH fell from around $4,800 $4,200, a healthy correction in a raging bull market. But why? Here are the key culprits. ETF outflows and profit-taking. Spot ETH ETFs saw over $112 million in net outflows in just 2 weeks, flipping from inflows to sellers dominating. After a massive rally, folks cashed out profits. Technical signals gone bearish, ETH traded below its realized price, a signal that's historically led to big drops. Open interest plummeted 44%, and funding rates went negative, showing bears in control short-term. Macro mayhem, geopolitical tensions, hot U.S. inflation data, and broader market volatility triggered risk-off moves. Billions in leveraged positions got liquidated, amplifying the pain. But here's the twist. This wasn't a crash, it was a reset. Fundamentals like staking and Layer 2 adoption stayed rock solid, setting up the rebound we're seeing now. Fast forward to now. ETH is up over 32% in the last month and climbing fast. Analysts are buzzing. Prediction markets give a 64% chance of $5,000 by end of August. Why so soon? Surging ETF inflows have erased those losses. Whales are accumulating, like one scooping 2045 ETH at 457. And technicals scream bullish. Think bull flags targeting 5K and beyond. Moderate forecasts say 5K to 6K by year end, but with momentum like this, RSI not even overheated, it could happen any day. Even Changely predicts a peak of $552 in August. If you're watching, resistance at $47.93 to $49.50 is key. Break that and $5 next. This bull cycle, fueled by the Bitcoin halving, ETH upgrades, and institutional hype, could push ETH way higher. Analysts eye 6K to 15K by end 2025, driven by ETF demand and Treasury adoption. Standard Chartered just upped their forecast to $7,500, citing stablecoin growth and TradFi jumping in. Fundstrat sees 10K to 15K if inflows keep rolling. Supply squeeze is real, only 12% of ETH on exchanges, the lowest since 2016, meaning any rally could go parabolic. Bullish patterns point to $5,300 before a pullback, then higher to 7K to 8K. But watch risks. Altcoin rotations and volatility could shake things up. Overall, structures bullish above $3,800 support. Dips like the recent one, they're golden opportunities. Here's your playbook. Buy the dip and dollar cost average. Accumulate on weakness with regular buys to average down costs. HODL strong. Don't panic sell. Stick to fundamentals like DeFi and staking yields around 3.1%. Manage risk. Diversify. Watch key supports like $3,800 and avoid over-leverage. Remember, discipline wins in parabolic runs. Not financial advice, do our own research. Social buzz, mixed but tilting bullish. Sentiment scores hover around 66-100, down recently, but with bullish flips post-liquidations. ETH's lagging BTC's greed spike, which sentiment says means more upside room. Low hype despite gains nearing 88. Whales and posts scream don't short ETH with 8K targets. Major players, Vitalik Buterin, focuses on tech like DAO upgrades, not price drama. Institutions like BlackRock lead ETF flows, and firms like BitDigital are staking big 105K ETH for yields. Ansem predicts 2025-2026 as crypto's boom years. ETH and Solana dominate discussions over BTC. So, ETH's dip was a blip. Now it's eyeing $5 and cycle highs up to 15K. Stay bullish, buy smart, and ride the wave. What do you think? 5K this month? Drop your predictions in the comments. Like if this helped, subscribe for more crypto updates, and hit the bell. Thanks for watching. See you in the next one.